the very near term, last week, the markets were in this grip of this whole Hindenburg, Adani to and fro, and that brought about nervousness not only in the group stocks, also in banking and some of the texture of some of the others. And there is, of course, the big event of the budget, coupled with the Fed meet that very day. So how do you look at the texture of the market in the very, very short term, which is the next 3 to 5 days? I know you don't look at that very short term piece, but I'm still urging you to kind of look at it for us.
Yeah. So if you just roll back a bit, last year, India outperformed significantly. And we were of the opinion that, we have reached a point where the optimism is really rising. And such is a time that, when optimism rises significantly and you have any event which creates doubt in the mind of investors, that creates volatility. So I think that's what is playing out right now. You don't have any margin of safety much when when valuations really spiked around 20 times forward, and you then have some uncertainty unleashed by these kind of events, and that causes volatility. And and going into budget, there are talks about capital gains and things like that. So that creates uncertainty, and investors don't like uncertainty. So I think it's a culmination of two factors that we reached kind of a peak valuation, just entering 23, outperforming the entire global markets, emerging markets. And then this unleashing of few uncertainty events, which is taking its toll on markets. But the underlying theme of the market, where the economy and the profit cycle is being driven by the investment and credit cycle, I think that remains intact. I don't see any risk to that at this point in time so far. And also about micros, I mean, if you look at earnings so far, I was pleasantly surprised that so far, if you look at the earnings, the beats are outpacing the misses broadly. Inline and beats are outpacing the misses. So that's also a good sign that underlying demand is good and the inflation pressure is going off some of these companies. So that's a positive in my view.
Yeah, most certainly. IT, banking, to an extent, autos, the numbers are looking pretty decent, you have to admit. Okay, I'll talk about that too. But just first, a bit of a hypothesis. If indeed two events happen, which is that the Adani FPO, as they have said, moves ahead successfully, and the budget doesn't tinker too much with either the fiscal discipline or the glide path, or there is no big devil in the detail around taxation, around fiscal deficit, what have you, then do you think the recent correction that we've seen in the last few days, as well as if you take it from the highs, the nearly a 7.5% fall, does it take the sting out of the valuation argument that people have long held in the last quarter of 2022 and coming into 2023?
Let's see, the valuation angle remains. So we are expensive, and we had turned more expensive when we reached almost 19,000. So we have scaled back, so that's helping a bit. But broadly, this valuation angle will still play out because some of the other emerging markets are quite cheap that way compared to India. What will happen if the things that you just talked about is it will give a respite to the market. And it may go back to that range, which was the case, 18,000 plus kind of a range. But to really spike from there, we need a flurry of earnings surprises and a bit of monetary policy showing real signs of easing. These two things will really spur valuation. So that will really, kindle some outperformance. So, but these two things have to follow. One is this uncertainty that we have been seeing over the past few days, and so that needs to be behind us, and we need to see a continued earnings trajectory, and coupled with the quantitative tightening cycle angle that we have been seeing over the last year easing, and people actually believing that we may enter a quantitative easing cycle. So that will spur market, in my view. Otherwise, I think it will continue to remain in the range-bound manner because we are at the upper end of the valuation range.